Hello, everybody. Thank you for joining. My name is Mark Coupland. I'm the VP of Business Development here at Optimal Blue, and we're excited to be partnering with Mortgage Coach today. And as I think many of you on this call know, Mortgage Coach has been a very highly strategic partner of Optimal Blues for a while. We're excited. We're excited to bring them and Mitch Kider on board to talk to everyone. You know, Mortgage Coach definitely shares our passion around technology in terms of reinventing the mortgage space all the way from consumer to capital markets. And so the opportunity to bring that together on today's call is great. In terms of, I think, what you're going to hear today, numerous lenders, on my side at least, have definitely enjoyed how Optimal Blue and Mortgage Coach work together. So I take it an opportunity to learn a little bit about that, but also how you can improve your business. I think there's a lot of opportunity in terms of how you can leverage real-time information to improve efficiency and compliance while driving production at the same time. So we're excited to kick this off. I'm not going to spend any more time than that on it. I will transfer this conversation over to Joe. We'll get it going, and then I'll talk to you guys more at the end.
Thanks so much, Mark, and thanks to the entire Optimal Blue team who are attending today, and of course our special guest, Mitch Kider, who we'll hear from in just a few minutes. I'm Joe Puthur. I'm the president of Mortgage Coach, and I've been creating software innovation for our industry for more than 15 years. And what we've created here with Optimal Blue really is special. When you think about the Mortgage Coach experience, which has been fundamentally focused on helping families and helping realtors understand the benefits of various mortgage options to ensure that the mortgage is really part of the financial plan of the borrower of today. And to create this information, thousands of you, many of you who are on the call today, have traditionally spent 5, 10, 15 minutes producing the presentation. But with the integration to Optimal Blue, you can now produce these presentations in under a minute and deliver a Mortgage Coach total cost analysis to anyone, anywhere, at any time. Of course, over the last few years, the transition from the typical family and consumer to looking at information on a PC is now predominantly consumed, this type of information and behavior, on a mobile device. They're shopping for their home, they want to converse about their mortgage, they want to look at their entire financial picture on the devices they trust and use most. This is the same for your professionals as well. So as we look at the value of the Mortgage Coach Optimal Blue relationship to ensure that you can use compliant presentations to drive a competitive advantage, we've really enabled the operation of many of the functions we're going to talk about today directly from your mobile device. So bringing the power of the Optimal Blue numbers to life on the devices, again, that customers have in their pocket at all times. And so whether it's an in-person meeting or a meeting over the phone or a meeting where you're supporting borrowers who are literally with the realtor looking at purchase options, the whole idea is to eliminate this conversation around price. You know, the typical presentation today, even with a terrific pricing engine, looks like a white worksheet where you're showing the price, the fees, the initial investment, but it's not necessarily creating the full picture for the customer where they actually can understand the benefit of the loan. Some of you on this call probably have very sophisticated spreadsheets and Excel worksheets that have worked well. But again, if the customer isn't able to see the information and if the calculations aren't being done in a way that can confirm consistency on all devices, there's exposure both to the organization and to you individually. So these fee worksheets and these Excel spreadsheets, that's really an old way of doing things. And we've made it easy together in the partnership to make that conversion to be able to show the information in a graphical format. When you have charts, when you have the data in a way that whether you have a high school education or a doctorate, that it's easy to understand and it's easy to share and consume, you really have an opportunity to influence the sale earlier in the sales conversation. And when you think about what do customers need to commit today? You know, we really set the premise of today's meeting on fusing the value of compliant presentations and a focus on transparency with the latest technology that customers are looking to depend on. And video plays a big part, as you'll hear from some of the professionals today. When you narrate a presentation and a family can hear your tone and tenacity, they can understand your individual commitment to them, and more importantly, the other people supporting that transaction, the genius father-in-law, the cousin, the co-worker, when everyone is able to see your dedication to the customer, that truth is able to carry through whether you're actually on the phone live or not through your presentation. And these are some examples of actual customers in the market consuming presentations that were created with the Optimal Blue integration to the Mortgage Coach solution. Again, whether in the office or whether they're on the go or whether they're actually reviewing the options with the realtor to be able to determine what homes should they go visit, the information is available at any time, anywhere. And when you think about the typical experience of whether it's an open house or whether a customer is considering the purchase of a particular home, the idea that financial options are available really help inspire confidence both from your partners like CPAs and realtors as well as your other referral sources. So to create a modern mortgage experience has never been easier with the integration. And speaking digital is part of what's required today. I think a lot of people, when we have initially had this conversation, whether it's us together meeting with lenders or community banks or even top producing individuals, there's kind of this fear that the mobile device is for a particular customer. And we really want to make sure that today it's well understood that the power of both an oral presentation combined with a video presentation and a visual presentation really helps customers retain the information. And it's not a particular type of customer, it's every type of customer, no matter what age or income point they come from. So Fannie Mae and Freddie Mac did a really interesting study with Price Waterhouse recently, and they looked at a bunch of information that focused on why do people commit or why don't they commit. And a lot of the resistance to committing really came from a few points of misunderstanding. 61% of the time, it came from misunderstanding simple fees, terms, and ownership costs, things that a presentation can diffuse and ensure are communicated right away. The other area where customers were reluctant to commit was when the interaction with the originator wasn't highly personalized. You know, today's customer is very aware when things are canned or copied and pasted, or you're utilizing content that's freely available compared to your personally narrated video telling them why they're an important customer and why you should talk to them. And then lastly, before we really talk about the impact of transparency from a compliance perspective, is the idea, again, that everyone has a smartphone. When you take a look at folks that are between the ages of 50 and 64 that have the type of income to support a move-up home or changes in their home financing strategy to deliver wealth for their own personal goals, you're talking about more than 3/4 of the market. And this data is a few years old. So 72%, now we're talking about 90%. You can't go to a Verizon store or an AT&T outlet and get a dumb phone. They're going to give everyone a smartphone. And so the idea of bringing this information to life and giving your originator access to things like tracking if someone's viewed the presentation or having disclaimers or disclosures that ensure a confident conversation about options can be had before the loan estimate, all of that type of capability is rolled into the integration and the capabilities that the Optimal Blue team and Mortgage Coach have built together. And so to make sure that everyone understands exactly what we're talking about in terms of what's possible, you know, the integration is very straightforward. You're able to see here in this brief overview how it works in Optimal Blue. So whether you're in the LOS or whether you're pulling from the Optimal Blue website, you find the options, you do a search for the options. When the options are returned from Optimal Blue, there's a new column, and it's the Coach column. You simply check off the various loan options that you want to illustrate in the Coach column, and you select the Mortgage Coach button. And that takes all of the information, even the details about ARM loans, etc., and it pushes that into the Mortgage Coach presentation in a format that then's ready for you to adjust and share to the customer. So where you used to have to type this information in, or you used to have to refer to your fee worksheets, or you have to pull pricing engine findings and then do an import or export, now you simply have a single button to click, you have the information, and then it can be shared to the customer's mobile device. All in all in under 1 minute. So we're really excited about the integration capabilities. And we think it's really important that as we talk about this with so many professionals, I mean, we have hundreds of you on the phone today, that you're able to hear from some of the top producers who have been able to tap into this benefit. So many of you may know the Prime Lending Organization. They operate in all 50 states. They have 1,500 plus originators across the country. Aaron is a producing manager from the Western region, and he himself has had a personal experience given the integration that he'd like to share with all of you to learn from today. So Aaron, thanks for being with us. And Jacob, if you wouldn't mind unmuting Aaron so he can comment today.
Certainly doing so right now.
Aaron, you should be live with us and the folks in attendance. How are you?
Thanks, Joe. Yeah, I'm doing great. Thank you for having me. I've been using Mortgage Coach. I started using it over 10 years ago, and Prime Lending is a big believer in the Mortgage Coach software, and a large part of that is because of the integration with Optimal Blue, and the tool makes it so easy for our team to very quickly create accurate quotes in Optimal Blue and then merge, I don't know how many fields, hundreds of fields over. Specifically, the ARMs are great because you don't have to look up the caps, the margins, all those things that you can get wrong, and they get merged into Mortgage Coach so that we can create a wonderful presentation for our clients. And then the thing that's just been fantastic is I'm a huge believer in video, so we always incorporate a personal video on every one of our presentations that are going out. That literally takes 45 to 60 seconds to record the video, upload it to the presentation, and within a matter of minutes, you can put a very personal message in there with a very clean presentation to your clients, and it's a great way to set yourself apart in this market.
Well, Aaron, thanks for the perspective. And having used the integration and clicked the button yourself, I mean, not only does the video take a few seconds, but can you comment on the experience of just being able to go into Optimal Blue?
Yeah, and Optimal Blue, you can start there by getting all the various products that are available and select the ones that you want to present. The great thing about Mortgage Coach is that they were early on in the idea of you should probably be showing your clients more than one option, not just a 30-year fixed. And so now we can capture 2, 3, 4 different options in there all at once and seamlessly merge those into Mortgage Coach and put options in front of our clients so they can make the best financial decision based on accurate data, and it's not just putting one option in front of them in a clunky spreadsheet or something that's hard to digest.
Well, thanks, Aaron, and thanks for your experiences here. And at the end of the event, we'll certainly have an opportunity for you and some of the other top producers to comment. But it is really important, I think, for the audience here, especially some of those in secondary management and production management, who, when you look at technology, it's sometimes difficult to adopt, that they're able to hear just how easy it is to adopt. So thanks so much for your comments.
My pleasure. Thanks for having me.
I went ahead and uploaded a PDF for everyone here to be able to download too who's on the event. It is the Optimal Blue Guide, and it was really helped to be generated from the feedback of folks like Aaron and his team and others to create a really simple 2-page, 3-page document that shows you how the integration works. So that's posted in the GoToWebinar, and you can certainly download it, have a look at it, and really walk through how the integration works. That being said, presentations as well as marketing in general, what you can do to build relationships and rapport with your realtors, what you can to have the best possible strategies, what you can broadcast and incubate with your customers. This becomes a really interesting subject when you think about what you can and can't do in today's market. And there is no better leader in terms of providing the guidance in what works and how to make compliance your competitive advantage than folks like Mitch Kider. And so Mitch has been representing the broad spectrum of the lending space for many, many years, and the concepts around what's important to maintaining compliant sales and marketing procedures has been an epic pillar in the recent conversations that Mitch has had with his customers. And recently, we've done a number of executive roundtables where we've brought CEOs and leaders of compliance production and other departments together to really vent their concerns and hear from Mitch's expertise. And he was kind enough to give some time today to share some of the highlights from some of those key questions that that many of the executives had asked in that roundtable, and not only pertinent to what we're talking about here today in terms of the loan presentation, but just in general to how are you going to ensure that your brand can really succeed in the new market ahead. So thanks, Mitch, so much for coming today and sharing your time with the hundreds of leaders on the phone.
Thanks, Joe. It's good to be here with you today, and thanks for those kind words.
So, Mitch, I think it makes a lot of sense, you know, coming out of so many MBA events and knowing that many people on the line are coming to MBA secondary and many of the events ahead. You know, the association invests a lot of time in looking at what's important in the market, and they had so many concerns that they've been saying. What are your thoughts on what they're saying, and what do you think in terms of what the folks on the line should be concerned with in terms of sales and marketing?
So I think in terms of sales and marketing and originations in general as well, the biggest concern out there, and the key word that you hear is uncertainty. You hear that word a lot, and there's a lot of uncertainty as to what you can do and what you can't do. And there are a couple of different reasons for that. Number one, because the principal regulator governing mortgage bankers in this particular area, the CFPB, the Consumer Financial Protection Bureau, believes more in regulation through enforcement than regulation itself. And that becomes somewhat problematic because you don't necessarily know what the rules are until you read about an enforcement action. And so you walk around and you fear that, in fact, you're going to be part of that enforcement action. To the extent there are rules out there, and there are plenty of regulations that are out there, they tend to be somewhat broad, and there are undefined standards. I mean, if you take a look at UDAP, unfair, deceptive, abusive acts and practices, really what it comes down to is a definition almost that says to you, we'll know it when we see it, and that becomes problematic. Same thing with advertising rules, and so that leaves lenders in a position of having to be very, very, very cautious. They have to make sure everything they do is absolutely clear, it's transparent, it is understood by anyone that they approach and they talk to. And the issue with, you know, the uncertainty that's out there, not knowing what's going to come from your regulators, not knowing what a regulation means, and having regulators that in general don't like to clarify those regulations, that's of particular concern because, as you know, and as you've all seen, this marketplace is rapidly changing. And there's a need for things like we're seeing right now. There's a need for innovation. There's a need for technological innovation. And the uncertainty sometimes tends to stifle innovation that's out there. So the biggest issue is uncertainty and getting regulators to level the playing field so everyone knows and understands what's required of them so they can move on and they can grow with the business.
And I think with that being said, I mean, it's important, as you highlighted, that there is uniformity. You know, when you look at how to approach some of this uncertainty, to create an understanding internally that there is a right way and a best practice way of doing things. You know, when it comes to that type of conversation, obviously what you saw us share a little bit is a focus around the quoting of rates and fees. What do you think the folks on the line should be thinking when it comes to consistency around that sales process that up until now every originator was able to do their own way?
Well, you're absolutely right. I mean, uniformity, consistency, that's absolutely critical, especially in today's environment. So is clarity, equally critical. So I would say consistency and clarity, they go hand in hand. I mean, if you look at the creation of the loan estimate and the closing disclosure, that was created in theory so that consumers would know everything about their transaction itself. When you talk about the transaction prior to the issuance of the loan estimate, consistency is absolutely necessary. So you can't go back to those days where, in fact, every loan officer did their own thing and they all had a lot of discretion that they otherwise were left to, because if, in fact, everyone can exercise their own discretion as it comes to quoting prices and fees and things along those particular lines, you're taking a very, very big chance that some of the people out there are going to obviously be more clear than others. They're going to be easier to understand than others. Their rates and fees as they quote them are going to be calculated somewhat differently than others. And not only does that result in lost opportunities, quite frankly, but it also results in regulatory issues. It results in fair lending claims and problems along those particular lines, because you may have one loan officer that's quoting their prices one way, another one that's quoting it another way. And hey, lo and behold, once you do a regression analysis and statistical analysis, if you find out that a protected minority group is in fact getting quotes that aren't as clear or getting higher quotes, you've got a fair lending problem on your hands. So you're absolutely right, and that's what I like about the products that I'm looking at over here. Consistency is absolutely critical, and clarity is critical as well.
Well, I think it's really important to just emphasize one of the components of what you mentioned, and that is the fair lending side of things, because I think it's often overlooked that difference in the pre-sales conversation that has been enabled through the approach to each originator being an entrepreneur, which they are and should be, but there should be that level of consistency. Is there any other fair lending comments just in general, maybe not just in the space of the loan estimate, that you'd like to expand on further before we kind of transition to the realtor?
Well, the bottom line with fair lending, and it comes, it's governed by the Fair Housing Act, it's governed by ECOA. You've got to go out of your way to ensure that whatever your business practice is, however you're conducting yourself, and this is pre-LE, this is post-LE, this is lending in general, you've got to ensure that you're being fair across the board and that everyone is ultimately being treated the same way. But in addition to that, even if you have a facially neutral policy, that in fact that policy isn't somehow adversely affecting one group over another. That's known as disparate impact, and that becomes very problematic. So for example, if you have a policy that leaves discretion to your loan officer and how they're quoting their prices, how they're otherwise going to deal with that consumer as it comes to pricing and fees along those lines, on its face that may appear to be a neutral policy. I mean, it's simply a matter of which loan officer someone walks in to see. But if the result that you get out of that is a disparity, if one group statistically is treated differently, it's recognized as being more adversely affected, as a result of that, you have that problem on your hands. So fair lending, the Supreme Court in this past year looked at a case on disparate impact and ruled that, in fact, it is a viable claim under the Fair Housing Act. That means everyone is subject to reviewing their practices and making sure that it's consistent across the board in the application to consumers.
Well, thanks for that clarity, and I think that really drives home some of the points that the executive leadership, when they posed the question, were looking for. So as we transition from thinking about the consumer directly for a moment, as you know, one of the top conversations that came up across all of the open forum, whether it was talking about MSAs or other agreements, really boiled down to what are the interpretations of what we can and can't do with realtors. And when it comes to this process, the pricing engine process and really the quoting process, the consistency around what a pre-approval means and what it is and it isn't in today's environment. So can you comment a bit on this process?
Yeah, I mean, there's a fundamental problem with this, with this particular area, because whenever you're talking about pre-something, pre-quals, pre-approvals, conditional commitments, the devil is always in the details. And there isn't a good understanding on the part of your regulators, but there isn't a good understanding in the industry and with the realtors that you're dealing with about the difference. There's a big difference between a pre-qualification and a pre-approval. Theoretically and technically, a pre-approval is something that you do after a full underwrite, when you then inform the consumer that only subject to certain verifying information, they will in fact get that particular loan. But the truth is, today in the industry, there isn't a real standard for this that's being followed by the industry itself, and that creates a problem. Now, realtors don't want a lot of flexibility. Realtors want a letter that they can see that says, okay, these people are going to get this loan, okay? As a lender, you obviously want some more flexibility over there because you don't know what's going to happen further on in the process. So you want to put certain conditions in there so that you ensure yourself that, in fact, if something changes or if something didn't pan out, they don't view what you've done as a loan commitment. And there's a fine line that you're walking. You know, there's a case that I'm advising a group on in the Midwest that goes right to that particular issue, because the sellers of the property are in fact going after a lender that issued a pre-approval letter. And in that particular case, the pre-approval letter was issued not to the consumer, but actually was addressed to the people that were sellers. And so they argue that was an inducement for us to, in fact, enter into that particular arrangement. So again, you've got to be really careful with what you're putting out there. You've got to be careful with the terminology. You've got to understand the difference between a pre-qualification, which is really just an initial credit check, effectively, and a pre-approval, which theoretically it indicates that, in fact, you've done some type of an underwrite of that particular loan. And again, you got to be consistent. It comes back to what you asked earlier, Joe. It's consistency across the board. And it's important that it not vary by loan officer, it not vary by branch office, but that lenders, in fact, have policies and procedures in place that dictate how they're going to be handling these matters.
Well, I think you bring up some really important perspective, especially around how the realtor's interpretation of some of these meanings and the terminology and the misinterpretation can lead to some, negative conversations. I would take away and hope that everyone is able to take away just how important that it is that the customer, the family, knows the meaning of those terms and understands the value that they're getting and the information that they're getting when they come in with a letter or a document, that when they're confused, the realtor becomes confused as well. I think this transitions well into the broader question, though, Mitch, and I know we spent a lot of time on strategies in general, so let's just take kind of the top tier summary and just share with the group, if you would, the best practices for partnering with the realtor today, because you have to be there to help purchase clients, but we know with so many restrictions and so many rules, there's only a few right ways to do it.
So let's start off with a basic understanding of what governs your relationship with the realtor. And that understanding has to come from Section 8 of RESPA. So Section 8A of RESPA says no one shall give and no one shall accept anything of value in exchange for an agreement to refer settlement service business. So you cannot pay a realtor for sending business over to you. You cannot give the realtor something of value for sending that business over to you. But there's exceptions to that particular rule. In the statute itself, if you look at Section 8C2, you can pay someone bona fide salary or compensation for services they render for you, or you can pay them the reasonable value for goods or facilities they otherwise provide to you. Now, there are a couple of court cases out there that I'm sure you've all been reading about, and some of which I've been litigating, that go to how you properly interpret that. Ultimately, hopefully, the courts will rule in favor of what the interpretation has been for a period of 40 years until very recently. And that is that Section 8C2 is an exception, and you can, in fact, deal with a realtor on a straight-up basis, and they can provide certain services for you. But until courts rule on that, the answer really is you've got to be really, really careful about how you approach your relationships with realtors. Number one, the most important thing, and the most important thing to the realtor, quite frankly, is the service you're going to provide. Realtors, ultimately, real estate agents, they want to know that their loans are going to close. They want to know that you're going to be timely, that you're not going to get in the way of the transaction itself once that consumer is approved, and that loan's going to close. So, there's a lot of talk out there about how you win a real estate agent's, business. It is by making sure that everyone is informed of how you do business, what's going on, and that they know that you're providing good service, and that, in fact, that loan is something that's going to close as long as your consumer is obviously eligible and has been approved for that particular loan. What are some of the best practices otherwise? Well, one of the things that a lot of lenders haven't focused on, but they should, is if you do something that benefits the consumer, that goes to the benefit of the consumer themselves, that's known as a consumer rebate under RESPA, and it doesn't mean necessarily dollars, but that's what it's called, and you can do that. So in fact, as a lender, you can, for certain consumers, provide benefits. If you were to, you can provide benefits by way of lessened closing costs and things along those particular lines. You have to be careful, again, that you do this in a way that doesn't violate our fair lending laws. But the bottom line over here is you're in the lending business, they're in the selling business, and you have to remember that you can't compensate them for sending that business over to you.
Well, I think that's a great summary and really echoing the fact of bringing the true value to the family that's looking at the home and helping the realtor ultimately help their customer is really the best way to build that referral network and to do so safely. And I think that the perspectives that you share really gives some folks some actionable ideas. And like I said earlier in the call, even though we won't be able to open to QA, we always collect questions from Mitch and propose them for future events. So please, to the audience, if you have other questions, especially along some of these subjects that we're talking about today, go ahead and enter them in the chat, and we will cover them in a follow-up event. So, you know, we talked a bit about realtors. We, of course, talked a bit about consistency. One of the things that's really interesting, I think, especially about some of the largest lenders that are here on this call, is as there's consolidation in the market, you know, different brands are becoming parts of other brands. You see a lot of originators doing things where they name themselves a team, and certainly, you know, the integrations that we've done from a product perspective allow a lot of these things to function. But in practice, from a business perspective, you know, really speaking to the leaders of compliance and the heads of secondary, et cetera, on the call right now, what would they need to be aware of when it comes to some of these DBAs? And the idea that that a lender could have, you know, multiple brands that are all operating under their umbrella.
So you've got to be really careful in this particular arena. When you have multiple brands that are operating all under your umbrella, some of those brands are operating in the same arena, in the same location. And when you have that, you've got to make sure, again, that their processes and the procedures are the same across the board through those multiple brands themselves. Again, you can't vary your pricing practices. You cannot vary the manner in which you're quoting your prices. You can't vary the manner in which you're dealing with your consumer simply because you're operating under a different brand name. In fact, if you have two different brand names, but they're operating under one umbrella, if in fact you price differently, we come back again to the issue of fair lending. We come back to the issue of UDAPs. Is it a deceptive practice if I just happen to go to one of the brand names as opposed to the other brand name, that in fact I'm getting different information, that I'm getting different pricing, that my fees are different? So you have both of those issues. Both, it could result in a fair lending prosecution if in fact there's a disparate impact as a result of that, but it also could result in a deceptive trade claim, in a deceptive act as well, because the consumer doesn't really know that you're operating under one umbrella. So number one, you've got to make sure they know and understand what company you're working for. The consumer needs to know and understand who the responsible party is. That is absolutely important. Number two, you've got to comply with state laws and you've got to comply with federal laws. So for example, if you're operating under a team name and it rises to the level of being a DBA, which oftentimes it does, most of the time it does, FHA requires that you register all of your DBAs. State laws, for the most part, require that you register all of your DBAs. So you have to worry about that. You've got to make sure you're meeting those particular requirements. But in the end, as a company, you've got to make sure that whatever brand names are being operated out there, they know and understand your rules, your policies, your procedures, and they all operate in that consistent manner. Otherwise, you're going to have issues on your hands.
Well, thanks for that clarity on this question, Mitch. And I know that, again, many of the top producers on today's call operate in those team environments. And it's important that you ensure your organizations are handling those team names effectively, too, so that you can protect your branding, as Mitch mentioned. I think in terms of this question, I did want to address some of the folks who asked it and just making sure that it's clear that we do support this concept. So if you're doing things the right way and you are managing your branding correctly, you certainly can utilize the products and services that are being presented to create the consistency needed. I think it's important too when we think about these additional processes to manage things like DBAs or just processes in general. Organizations today, the lenders today, costs are rising. And when you think about the producing managers and the folks who are on the line today who really are trying to get the most transactions for the folks that they currently have on the payroll, any thoughts around how lenders should be thinking about how to better manage this increase in origination costs and really the perspective on how to do so in a process-oriented way?
So I'll start off by just giving this caveat, and that is this isn't really my bailiwick. I am a lawyer. And, I can tell you what you need to be doing otherwise, and I can defend your practices. But I have been representing this industry for a period of 35 years. So I probably know, a fair amount about what's happening out there. I do know a fair amount about what's happening out there. And as we've been talking about, there's a lot of innovation. Your industry is really at a crossroads right now. There's a lot of technology. There's a lot of innovation. There are a lot of tools that are available for loan officers to use that can assist them and that can assist companies in reducing those particular costs. And so, technology, I think, is actually the key. I think you see a lot of technology used today. I think you're going to see a lot more in the future. I also think you're going to see a lot more consumer direct originations as well. And I think you're going to see technology, and you're seeing technology that assists you as a company and assists a loan officer with the consumer in originating those particular loans. And ultimately, the technology is going to bring down the costs because you have to utilize it in a way that creates a more efficient process for the company. And that's what I see happening in the industry, and I think we're going to see it happen more and more as time goes on.
Well, I agree with you, Mitch, and we really appreciate your comments today in helping drive a real productive conversation with the audience. We just have one final question that really talks about a different segment of the business that's really important to many of the folks on the line right now, and many of the customers that utilize the Optimal Blue solution as well as Mortgage Coach, or might even be considering either of these options. They have a servicing portfolio, or they're looking to enter the servicing arena as an area of additional revenue generation for their lending institution. When we look at the possibilities of taking a mortgage under management and helping customers manage that loan, not only in a single transaction but over the life of the loan, certainly there's a lot of value. But what do lenders have to think about in terms of making the servicing decision, and should they move forward?
So there's a lot to think about in this particular arena. When I first started representing lenders in the early 1980s, most lenders serviced as well. It was before the time of correspondent lending and large aggregators, but it was a much simpler business back then, and servicing itself was pretty much manual at the time as well. Today, though, what you've got to recognize is a servicing operation relative to the origination operations is much more complex. It requires a very demanding set of activities and obligations that require a high degree of precision in the way you service a loan. I mean, ever since the mortgage meltdown or the industry crisis, whatever you want to call it, in 2007 and 2008, there's been an exponential increase in the level of scrutiny that's paid to your servicing operation. Every regulator out there is concerned about servicing, and you have to worry about things such as how quickly payments are processed, how quickly statements and other communications are given to consumers, how quickly questions and complaints are reacted to and resolved, whether or not you're operating in a fully transparent manner and the consumer knows and understands what is required of them and what you're going to otherwise do for them. You have to deal with distressed borrowers. You have to deal with all types of activities that in some ways are actually foreign to the origination process. And in addition to that, if you're thinking about getting into servicing, which sometimes can be very fruitful, servicing can be very good and you can build value in your servicing portfolio, but you have to worry about the volatility of the value of those MSRs. You have to be concerned about your financial obligations of advancing funds to investors, despite the fact that your borrower may not be paying. You have to advance payments of taxes and insurance, even though you might not have enough money in your escrow account as well. And otherwise, you're going to face penalties, and you have to worry ultimately about the loss mitigation issues and whether or not, a consumer simply is not going to make it. And you have to meet all of very specific state differentiated and federal requirements in terms of how you deal with defaulted borrowers and how you otherwise deal with foreclosures. So, this is an area that always looks, which is true of many things in business, it looks much simpler from the outside, but you've got to have the expertise. That's critical to it. And again, servicing is another one of these arenas where you've got to have the technology as well. It's not as manual a process as it was in the 1980s. As we deal with default servicing, it becomes more and more manual today. But it's an area that you need to study, that you need to look at. You need to make sure you have sufficient capital and sufficient liquidity. Otherwise, it's not an area to go near.
Well, thanks for the comments on servicing, Mitch. I think it was helpful for a number of the folks that raised the question, and ultimately, I think you helped frame the importance of technology on the servicing side too. The things that you say to a customer and how you communicate to the customer throughout the servicing activity is crucial, and the opportunity behind retaining that customer is one that you'd have to take a technology approach with too. So thanks again, Mitch. We're going to dive a little bit deeper into the capabilities of the integration and hear a little bit more on how it helps some of the managers on the line maintain consistency and compliance. But do you have any closing comments for the folks who have walked through your questions today in terms of the origination technology solutions or anything in general, Mitch?
Well, what I would say is this, and I'm sure most people that are listening to this know and understand. I've been an advocate for your industry for a long time now. You work in a great industry. You also work in an industry that's changing, and technology is finally catching up to your industry. Stay on top of these things. Stay on top of these developments, and make sure you make the best use of what's available to you. That's my advice.
Well, thanks, Mitch, and I'm sure many of these folks are going to put that advice into action. And when you think about the types of presentations that deliver a consistent approach and help educate both the realtor and the potential home buyer in the information necessary to make a confident mortgage decision, you really are talking about an endless array of scenarios. And when Optimal Blue and Mortgage Coach got together to look at how we could create an integration that made a difference for all departments, be it production, sales, marketing, or compliance, we had to support every type of loan scenario. So just some examples of the types of conversations that you're going to have through the use of the integrated point is things like a first-time home buyer presentation, where you're really going to help people who might be renting today or don't believe they have the power to make a home investment, to give them that clarity that it is affordable and they can have home ownership. You're going to help people understand the impact of waiting to purchase the home, whether the price of the home goes down a little bit. If rates and fees change, they could be in a much different situation, helping people understand that the opportunity is today, especially in hot markets where the listing could disappear after just 2 or 3 days from the day of listing. You want to think about things like the annual mortgage review and being able to reach out to customers a year, 2 years, 3 years, 4 years after they've done business with your organization. When you take this approach of using the integration to put a presentation on their mobile device, it lives on the mobile device in perpetuity. They go from the iPhone 4 to the iPhone 5 to the iPhone 6, and that presentation comes along with them. And remember, every time that presentation is looked at and consumed, you get notified. You have an opportunity to reach out to them to adjust the numbers, to make the charts and graphs move, while also the organization is keeping a record that the customer saw what was presented, and it helps keep everybody in check as you really have a dynamic sales conversation and a sales process. Your branding is very clearly presented on the presentation, as well as all the different loan options in interactive graphs and charts that you can pinch, zoom, and swipe on the phone or the tablet. And again, whether they're looking at this presentation in print, or whether they're looking at it on a mobile phone, or whether they're looking at it on a computer from 10 years ago, the information is always available, and it's always live. So if you update the information, whether coming from Optimal Blue or you update the information directly from your mobile device, the information is always there for the viewer. So you can have 1, 2, 10, 100 viewers looking at the presentation and following along. Few organizations have been as forward-thinking as Cherry Creek Mortgage in really adopting technology to help deliver a competitive advantage on all aspects of the origination process. And they've been longtime Mortgage Coach supporters from very early versions of our product all the way to now with an integration as sophisticated as what we deliver with Optimal Blue. Kelly Zitlow is Vice President Cherry Creek and is a huge individual producer as well as a great leader and manager, and we asked if she would provide a few comments to you and how Cherry Creek's able to take advantage of this solution. So Kelly, thanks for joining Mitch and I in the Optimal Blue team, and we look forward to your comments here.
Absolutely. Thanks for having me.
Thank you.
So I was one of the originators out there that really was hoping that Mortgage Coach would integrate with OB, because in my mind it was just created so much more efficiency into something that I was already doing. So I'll go into OB, I'll start mapping out the strategy, and be able to just click that box and have that feed into Mortgage Coach has just been a real win from a sales standpoint. So I cannot say that enough. I'm so grateful that Mortgage Coach and Optimal Blue partnered in that, and it has helped my team really just become so much more efficient in educating the consumer and providing real knowledge-based lending, which is what we're about. So the OBMC Mortgage Coach integration has been huge.
Well, thanks, Kelly. And, you know, as a leader yourself, from a training perspective and maybe inspiring some of the folks who haven't been able to give a presentation before, how helpful has having an integration been in getting folks to try it?
Well, I mean, it's a pivotal piece because time is what we're all vying for, right? We all need more time in our day. We're all very busy. So to be able to just break down that barrier when we have new loan officers coming on board, to just walk them through, again, we're going into Optimal Blue, this is how we price, push the button, pushes right into Mortgage Coach. And one of the key things I love about Mortgage Coach is that we now can really call fees what they're going to be once that consumer receives the loan estimate. So for example, Mortgage Coach has the ability to create custom fees in the cost worksheet. So if it's a title fee, we label it title, hyphen, and then whatever the actual fee is. So that Mortgage Coach cost analysis does end up matching the loan estimate. So we're creating just some consistency with the consumer from day one all the way through the closing disclosure and closing.
Thanks, Kelly. That's tremendously helpful, and I think a number of other producing managers are going to be inspired to work with their team, and certainly I know that you are willing to answer questions from folks. So thanks so much for your comments. I would like to highlight another originator who's on the phone. Michael McDonald, he works for Congressional Federal Credit Union. And when you talk about the type of approach that organizations have, oftentimes very large origination firms are able to afford the type of technology that we covered today. But many of you are from community banks or lenders, and this type of technology is in your reach too. I know pricing engines for some of you are new, and certainly presentation technologies are very new. So Congressional Federal has been leading the way on Capitol Hill to providing great value to their customers and their depository clients to provide really great mortgage services. I thought we would hear a little bit from Michael on how the credit union has really been able to tap into the presentation technology. So Michael, do you have any comments to share with the audience today?
Yeah, so first off, thank you, Joe, for having me today and for allowing me to participate. So we're actually relatively new to utilizing Mortgage Coach, but we were super excited pretty much from day one to make it part of our sales strategy and part of our everyday sales process because like Joe hinted to earlier in the presentation, is we wanted to really transition away from just quoting rate and then sending out a fee sheet. We want to transition to more of an advisory role. And one way to do that is to articulate the options that the borrower has. And Mortgage Coach really enables us to do that. And so in regards to the Optimal Blue integration, we pretty much started with that integration day one. And it makes for a very seamless transition from quoting rate right into creating your Mortgage Coach presentation. And if you think about it logically, that's kind of the logical process that you're going to want to do no matter what, even if you're not using Mortgage Coach. So you're going to price out an initial scenario, and then you somehow need to articulate that to the member, or to the borrower, sorry. And so with the integration and how seamless it is, it really makes the process super, super smooth. And like it was hinted to before, you want to make the process as easy as possible because all loan officers are super swamped and they don't want to be spending a lot of time on an additional step. So for those of you who are kind of at the management level or in the secondary marketing level, you know that whenever you implement a new process or a new IT system, that getting buy-in from your staff can be kind of difficult. So one way to do that was with this Optimal Blue integration, and it makes that process much, much easier. It makes it going from spending 5 to 7 minutes on creating a presentation down to, like it was demoed earlier, down to a minute. So far, we've had a lot of luck with it. Our borrowers have responded exceptionally well. They all love it. Some people, including myself, are more of a graphical learner. So you might tell somebody, we can save you 0.25% on your rate, and that's going to save you $300 a month, but it may not click until they actually see it articulated in graphical form. So far it's been very good, and we look forward to continuing in having it as part of our sales process.
Well, thanks so much, Michael, and thanks for highlighting just how easy it is to adopt, and also for sharing the sample presentation from the phone that hopefully everyone on the line was able to see how it moved, and that you can control that movement from your own device, walking somebody through the presentation, much how Michael was walking us through the value proposition just now. So thanks again, Michael, for your time today. So whenever any of these presentations that are produced from Optimal Blue are viewed, you're going to receive a notification directly on your mobile device saying that the presentation has been viewed and giving you an opportunity to reach out to the customer. These presentations are simply links, so just like a website link, google.com or yahoo.com, you're delivering a link that they're able to click on. So you as an originator or a manager, you don't have to worry about apps and things. The technology takes care of it. If they click the link from an iPhone, it gets the iPhone app. If they click it from an Android device, it fetches an Android app, and they're able to then see, hear, and experience the presentation with you. And as we stated earlier, helping your realtors understand that with this type of capability, they can now talk to customers in a very casual and compliant fashion to reach the conversation around having a total cost analysis and the ability to have graphs and charts by having a conversation with you. Sharing these presentations is incredibly easy, and when you narrate presentations, they're shared on average of 4 times. So if you've ever lost a transaction to the genius father-in-law or the cousin or the coworker that I mentioned earlier today, diffusing those sales challenges become easier than ever by having your customer able to share your advice with the people that matter in their personal lives simply by clicking share on the device. Lastly, they're able to add, or you're able to add, narrated video simply by clicking on the upper left-hand corner of the app, selecting the client that you want to narrate the video for, and selecting video. So it's not an issue of MP4 files or record a webcam or how do I attach a video. If you can leave a voicemail, you can leave video narration for a customer. And taking control of the presentation, highlighting the presentation from anywhere is just as easy. Open your app, open the presentation, and start touching the graphs, fees, or information, and the presentation will be moving for the customer. So again, it only takes just a few clicks to experience that incredible connection to the customer. Optimal Blue and Mortgage Coach have a unique partnership, so if you are an Optimal Blue user already, your Mortgage Coach is leading the way with mobile innovation, and one of the ways that we deliver that is not just through our presentation capabilities that we've highlighted in our integration today, but we've also been providing market insight and information to the industry for decades. And one of the ways that we do that is by putting MBS insight to life on the mobile device. Never before have you actually been able to see candlestick charts or the actual movement of the MBS market live in a native app, not a website, but an actual app that can deliver native notifications and quick alerts on your phone. And as an Optimal Blue user, you have the ability to log into this now, whether or not you're a Mortgage Coach member. So you can have the capabilities of RateWatch as just a part of our terrific partnership. Collectively, both organizations agree that whether you're in secondary marketing or whether you're a top producing loan officer who's watched the market before, every single originator needs to be able to explain to a borrower why the mortgage is not a commodity and how the market actually drives our industry. And so to be able to do that, you have to be able to have the market information in your hand. So when you log into Optimal Blue, you'll notice that there is a Rate Watch by Mortgage Coach button today. And so everybody who's an Optimal Blue subscriber can click on this right now. Again, regardless of what department you're in, if you use Optimal Blue, you will see the Mortgage Coach Rate Watch button. Simply fill out the brief form, which will activate your personal app and will allow you to download the app whether you're on the iOS platform, the Android platform, or the Windows desktop platform. And when you have the app installed, again, one of the things that makes it very unique is that we believe you should be able to share this information. So share the graphs, share the charts, and help people understand that you're watching the market. And in return, when they begin talking to you about what you can do for them in their investment strategy, you'll have the type of presentations capable that we show with the total cost analysis if you become a Mortgage Coach member and enable the integration. So you can share the information right from RateWatch, and we really take a focus as an organization of being on the cusp of all mobile technology. So things like the Apple Watch or the other types of various consumer technologies that are out there, we continue to innovate to bring you and your brand to life on those devices as well. So hopefully today's event has been informative and helpful for everyone on the call. We are going to share a recording. We know that Mitch's insights are very actionable. And again, if you're an Optimal Blue user today, you can use RateWatch right away and have it as a second or third monitor showing you the market real time wherever you are at any time. So thanks for being part of the Mortgage Coach experience today. I'll turn it to Mark for just a moment and the Optimal Blue team if there's anything additional that we'd like to share with the folks who attended today.
Yeah, I would say thank you everybody for joining. You can see why we have a strategic relationship with Mortgage Coach. The last lender, one of the last lenders I talked to is a high originating independent, one of the top independents in the country, who said they were so successful because they focused on making their LOs rainmakers. And one of the ways they did that was by allowing them to focus on what they do best, which is, and not having them work on processing and things like that. You can see the tools like this are what's going to add that consistency and clarity. and really drive more power to Optimal Blue solutions. So we're excited about it. If you want information on Mortgage Coach or Optimal Blue, you can come to our website, and you also have Mortgage Coach's website down there as well. So, no, thank you, Joe and Mitch and the rest of the team that joined the call today. This was great.
Well, thank you, Mark, and thank you to all our guests and to the loan officers who participated. Again, as Mark alluded to, you can fill out the quick form at mortgagecoach.com/optimalblue or talk to your Mortgage Coach or Optimal Blue representatives about how to learn more and turn on the integration. And again, creating compliant solutions that help you deliver a great competitive advantage is the focus of every organization that's participated on the call today. So if anyone has any further questions, again, for whether it's Mitch or some of the members that shared their own personal experiences, please feel free to share. You can reach me directly. I'm joe@mortgagecoach.com is my email address. I'd love to hear about what you thought of the event, our innovation, or any ideas you have of how to bring more value to families today that are looking for the home of tomorrow. So thank you to everyone again, and I hope you enjoy the rest of your day. Cheers.